this time of year to show about market updates. Today, global hedge funds surrendered in July, but the desire to short the stock market did not die. Goldman Sachs reported on Monday that global long-short hedge funds were forced to lift bearish bets that dragged down the July results. The long-short fund recorded its worst monthly alpha performance since May 2022, but Goldman Sachs said the de-risk phase may be nearing its end, and the hedge funds may short stocks again in August. Losses were most focusing on short positions in the portfolio, but Goldman Sachs also saw a marked deterioration in bullish performance. The data shows that the alpha return fell by about 1% for the month. The so-called alpha measures the return earned by the fund in excess of benchmark index. Goldman Sachs said as of July 28th, long-short hedge funds had a negative alpha return for the 9th consecutive days, the longest since January 2017. As of the largest provider of lenders and trading services to investors, Goldman Sachs is able to understand the movement of large hedge funds and asset managers. Mark Spiegel, portfolio manager at hedge funds Stanfield Capital, said, "This year is a challenge for anyone with a large short position, even if the fund is net long overall. There is a huge disconnect between depressed corporate earnings and stock prices in the tightening monetary policy environment." A separate Goldman Sachs report on Friday showed that the long-short hedge funds rose 0.49% in July, driven by an overall rally in equities, as stock market rallies tend to favor their long bets. The S&P 500 rose above 2% over the same period. Overall, different hedge fund strategists were forced to close their positions to avoid further quick losses as the market rallied in July. Goldman said, "The bank added that the risk reduction has rarely been so strong in the past 10 years. Goldman Sachs said hedge funds may be nearing the final stages of de-risking. The agency added that going into August, the hedge funds may short again. Mario Onali, senior portfolio manager at Keros Partners, who invest in hedge funds, said hedge funds are unlikely to increase their long positions. "I don't think hedge funds in industry will start chasing the market right now because the volumes are at seasonally low levels, and gap risking is increasing." HBC Holdings announced a new share buyback program driven by higher interest rates. According to Tuesday's statement, HBC will buy another $2 billion in share additional to the $2 million share buyback program announced 3 months ago. The London-based bank derives most of its revenue from Asia. Benefiting from higher interest rates and cost controls, HSBC's second quarter earnings beat expectations. In 3 months to June, EBIT rose $8.8 billion, compared with analyst estimate of $7.96 billion. CEO Priya Yan said in a statement that it generated good and broad profits globally, benefited from strong net interest income, and continued to tight cost control, resulting in an increase in revenue from HSBC's global business. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.